Hi everyone. As you can tell, I'm not Adam. I'm actually Yannick, co-founder of Nimble. And unfortunately, Adam got stuck. I mean, his plane got stuck in Boston, and he couldn't make it today, so I'm here to replace him. I'm going to read my notes, because, we just decided that 1 hour ago. So, I'm glad we had travel insurance for that. And insurance is important. That's what I learned working on Nimble. So, there you go. I did not expect so many people to be interested in insurance at NFT.NYC, actually. I used to avoid insurance at all costs. I mean, I'm a creative person, and that's just not my thing. I mean, I don't care about risk. And Adam is actually our insurance/visionary guy. He has over 20 years of experience in the field, and he knows exactly what's wrong with insurance. And he was planning to talk to you about the future utility of NFTs in the insurance space, NFTs for actuarial tables, NFTs as dynamic property appraisal, and NFTs as transferable insurance policies. So, honestly, that's not my bag. I'm just the tech guy in the company. So I can mostly explain to you what we're building and what is the utility that we are bringing to the NFT space. For all of those talking points and the future of the utility of NFTs in the insurance space, you can definitely follow us, and we'll get the links to our socials at the end. Let me see if I can just show at least the logo. Let's see. All right. There you go. So most of you already heard the term insurance is a necessary evil. Well, at Nimble, we like to say that, it's necessary, but it doesn't have to be evil. The very concept of insurance stems from, people being able to pool their resources together and share the burden of risk, to make a member of the community whole in the case of a loss event. That's how I can basically summarize what insurance is, or what it used to be. But somewhere along the line, the concept got blurred. And now these insurance companies, they represent this so-called necessary evil. And the reason why the people feel that they cannot evil is because their incentives are not aligned with the one of the community. And with Nimble, we are changing that, actually. At Nimble, we're using the power of the blockchain to create what we like to call risk pool as a service, or insurance as a service. Our platform allows, I'm really sorry about that, but our platform allows organizations to leverage a liquidity pool to cover their specific risk. And all of the insurance process is being handled by a team of Nimble certified insurance professionals that are like actuaries, claim assessors, adjusters, everything like these people working in insurance organized in a DAO. So now, how does it relate to NFTs? With the rapid growth of NFTs and the increasing values of them, comes an inherent risk. So we all heard about rug pulls, hacks, right? IP infringement, loss of value, and many more risks that I'm probably not aware of. We can bring protection for that, for the creators, for the community, built on the trust of the community. Just imagine taking 1% of the sales fee of an NFT sale and pool it in a risk pool to protect your community. That's what we do. We provide this framework. We'll be launching our first risk pool with a partnership with the Algorand Foundation. We're currently building on the Algorand blockchain to cover risks for DeFi protocols. And soon, we are going after, the risk that I just outlined on the NFT project communities. So yeah, well, that was a short one because I am not Adam, but I'm definitely here if you have any questions, and I'm open to anyone. Let me just go over here and slide to the last, oh shit, you see, there it is. Nimble, insurenimble.com. You can follow us, like I said, on Twitter. Adam's gonna definitely post all of these talking points like that I said. And if you have any question, I'm ready to take them. And if not, thank you very much. Oh, cool. I think, let me see if I can get a mic. Yes. Can I get a mic for a question?
You want to take a question?
Yes.
Well, why not? All right. Who has a question? Okay, here we go. Why don't you say it to me? I'm going to repeat it for the camera because, you know, your great-great-great-great-grandkids are going to watch this hundreds of years from now, and they're going to know the question that you answered. Hit me.
Yeah, so like with traditional insurance, there's certain like predefined like numbers or equations that you use to like define how much the person's going to have to pay, and the risk and reward is what you're going to have to choose, you know, before you make the decision to go forward with the contract. How would the pool and how would decentralized frameworks in the blockchain like change that equation where like it will be more attractive to me to do insurance through this type of methodology versus a traditional one where like if I was to do car insurance, I kind of tell them on the phone like this is how much I have to like, you know, for funds, and I could either do like the better, you know, plan, the smaller plan or whatever. You have to kind of weigh in what the risk and rewards are.
Right.
How would this technology change that factor where like it would be more enticing for me to do it this way versus the traditional way?
I'm going to have you summarize that question.
I know you would do that to me. Slide away.
I'm going to slide back off the stage.
No, but that's a very interesting question. So I'm going to try to summarize that. So what the users pay in general when you contract an insurance is called a premium. So these premiums are calculated basically on the performance of a risk pool. So all that money that is pooled, the performance of that risk pool is calculated also based on the inherent risk of the cover that we provide. So let's say if you do car insurance, but you have so many like term and condition that you do not cover anything, well, it's going to be a very good, very interesting risk pool, and the premium can be very low because there is no claim that is accepted. So that's kind of like an example I wanted to take. But to answer your question, basically what we remove from the traditional insurance is all of the operational costs because it is done on the blockchain. So well, we don't have to pay for like 30-story building to like have all of these actuaries and like insurance professional working. We remove all of that, and it works 24/7 because it's on the blockchain. We do have to reward these claim adjusters, actuarials that are working in the DAO, and this is what we are going to do with the Nimble token. But basically, yes, what would make you choose to go towards Nimble instead of another insurance company like more traditional is that the cost of the premiums is going to be way lower because we operate on the blockchain. You're welcome.
We'll take one last question. Why don't you stand up and ask the question, please?
Who insures the insurers? Have you talked to the reinsurance industry, and are they positive about insuring companies that are essentially being in the business of insuring assets that they don't see as real or as real collateral?
I'll summarize this one. Yeah. This one was easier. So have you talked to the reinsurance industry, right? Who insures the insured? So maybe you could speak to that as we wrap up.
Definitely.
Okay.
So yes, definitely we're talking to many reinsurance company. We are currently talking to many of them that are located in, incorporated in Bermuda, because in Bermuda we have a very more open regulation framework around digital assets. So being operating over there basically allow us to have a more common understanding with these companies regarding reinsurance and the whole insurance business around these digital assets that are, well, they're real because, well, they have value, but yeah, intangible. So yeah, you're welcome.
Thank you so much for filling in for Adam.
Yeah, I did my best.
Yes, really happy to have you. Thank you for being a part of our event today. Let's give
Thank you, everyone.
a hand. Thank you.